It's been another busy week in the property sector. Prices are rising faster in Sydney, but Melbourne needs more units more quickly. REA Group Chief Economist Nerida Conisbee joins us in the studio. Let's start with Melbourne and the units.
Yeah, look, I think at the moment everything does need a bit of a coronavirus disclaimer that, at this stage we don't really know what the ultimate impact will be. But at the moment in Melbourne we are continuing to see very, very high rental demand. It is pushing up rents across the city and pushing up rents in the unit market. So that's one part of it. The other side of it though is that we are seeing rises in unit prices in many of the high development areas. So quite different to Sydney, where we're still seeing quite a bit of quite tough conditions in places like Parramatta and the southwest. Melbourne, places that did see very high levels of supply are seeing increases.
What about Adelaide? Because their rents are growing, aren't they?
Yeah, look, Adelaide's an interesting market. It's very stable and it tends to see quite flat price growth, but it doesn't really see the swings that we see, particularly in Sydney and to a lesser extent in Melbourne. At the moment, though, we are seeing some really good rental demand numbers coming through in Adelaide. So the market's not running quite as red hot as Hobart, which has quite a significant undersupply of housing, but it is seeing some decent rental growth, and we are starting to see, on a suburb level, 10% plus rental growth for some locations.
Makes common sense, doesn't it, that we've seen the growth in Hobart and cities like Adelaide, where Sydney and Melbourne can be prohibitive for a lot of people. So there's quite a push to go and get a great quality of life in one of the other cities.
Yeah, I mean, if you look at what you can buy in a city like Adelaide for, well under $1 million, it's quite lovely, and you can live in the Adelaide Hills or you can live, close to the beach, whereas trying to live in for under $1 million in many of Sydney's premium suburbs is virtually impossible. Yeah, in a one-bedroom apartment.
What about property prices? Are they becoming more synchronised across the world?
Yeah, so this is some research that's been done in the US around synchronisation of property prices, and what seems to be happening is for commercial property they are seeing greater levels of synchronisation, primarily because global investors are moving across country and looking at cities case-by-case basis and buying not necessarily in their local area. For residential, we're not quite seeing the same level of synchronisation, more so than we have in the past, primarily because a lot of Asian investors do invest outside of their own countries. In Australia, we don't see much overseas investment by Australian residential buyers. Australians tend to like to stick locally. They don't like to buy overseas, and we don't see much volume moving over there.
I was having a chat with a few guys yesterday who work in private health advisement, so to speak, and they were saying to me it's still very difficult for people to get money from the bank. We saw it with the Royal Commission and what happened. Is there any easing of that? We've seen the interest rates drop, but the biggest problem for a lot of people is they just won't be given the money. Yeah,
it is a problem. I mean, it depends who you are. I mean, if you're a first home buyer, you're probably finding it quite a bit easier. But if you're an investor or you're wanting to buy something a little bit more unusual, it is quite a lot harder. So it has eased up. It has become a lot cheaper. But I think banks are still very careful about how much they're lending and who they're lending to.
What about clearance rates? How are they going?
Yeah, really high. So Melbourne will be a low auction weekend. They've got a public holiday on Monday, so there's only around 300 odd auctions taking place. Sydney will be high. I mean, Sydney, we're still not seeing a big lift in auction numbers. Melbourne's starting to look quite different, but Sydney is still very low auction activity relative to where we were 12 months ago, and as a result we do expect clearance rates to hit 80% or potentially go over.
As you mentioned, you've got to put a bit of a disclaimer on, don't you, with the coronavirus, but it's been pretty robust, the market, hasn't it?
Yeah, it has been robust, and I think some sectors are getting impacted. I mean, if you're in the hotel industry or you're in the retail sector, I think they're the ones that it's a very immediate. We've lost a lot of tourism, we've lost a lot of students, so those areas are impacted. Residential, just seems to be holding up, and we had the interest rate cut, which does tend to lead people back onto our site. We see a jump in realestate.com.au when interest rates are cut pretty quickly, particularly in Sydney. So cheaper finance, people can borrow more. The people have been encouraged to start borrowing more and start spending more. So it will be interesting to see what happens over the next month.
Spending more time at home if they're potentially quarantined with the digitalisation of schools, and everyone's preparing for the worst, which I guess we all have to do, don't we?
Yeah, look, we do, and I think this is a thing. I mean, if you have a look at forecasts now, it ranges from a slight slowdown in global economic growth to full-blown recession, and taking it from that extreme to the other can mean vastly different things for Australia.
Now, the government wants people to spend money. They want to spend when the rates drop. And to be honest, look, without being careless or reckless, it's good advice. As people, if you've got the opportunity to spend a little bit, particularly on your capital investment, fixing stuff up, it's a good time to do it because money's not expensive.
No, and it's not expensive. I think on one hand, people, they know they can get cheap money and they're mostly employed. We're not really seeing high levels of unemployment. But I think the trouble at the moment with monetary policy is, on one hand, you can cut rates and you can try and get people to spend. But firstly, if they're worried about their future, then they won't spend, they'll save. And then if we start to see Australia's economic growth slow down and rising unemployment, then what happens there with even if you've got an interest rate cut, if you're not getting a wage. So I think the budget will be interesting as to whether they do anything around the virus with regards to guaranteeing people's incomes, for example, trying to get businesses to keep staff. There's going to be a lot around that depending on how bad the virus gets.
Yeah. But if you do own your own home and you want to put your kitchen in, it's going to help the price. It is.
Yeah, long term.
It's smart stuff. Nerida, good to see you.
Yeah, good to see you.